Active listings soar and months of inventory jumps upward. We're going to talk about that and much more in the Eastside, Seattle, and Snohomish County real estate market update. Hi, I'm Tony Meier with Windermere Real Estate. For 35 years, I've been an avid study of the real estate market, using this information, stats, understanding the marketplace to help our clients make smart, timely, and financially profitable real estate moves. We're hoping to give you some of those insights here today. We're going to talk about four things. Normally it's three, but we've added interest rates, and the new item is active listings. We're going to talk about how that's really changed in our marketplace. We're going to talk about months of inventory, the impact of active listings, and what's happening with median sales price as a result of that. So we're going to talk about all of these things in conjunction with each other. So first of all, interest rates. Interest rates moved back down in May, which is good, to 7.03, and we are just up half a point from last year, 6.57. Buyers have gotten used to higher rates, no doubt about it. Hopefully we'll see rates back into the sixes, but at this point we're sitting right around 7%. Not terrible considering where we have been. So active listings, this is the big story. So what I'm going to share with you is the 10-year average change between April and May. We do see listings every year come up between April and May. We're going to look at the 10-year average and then what's happened this year. One of the great advantages this year that sellers have had in this marketplace is inventory has been low compared to previous years, compared to last year more particularly. But you can see inventory is starting to change dramatically. So 10-year average for the east side is up 18% from April to May, but this year the east side is up 52%. That's a whopping big number. Now we're still below the average for the month of 857, sitting at 672. But having 52% jump in inventory compared to normal of 18%, that is significant. And that's showing up in our months of inventory right now, where we sit at 1 month of inventory. And again, months of inventory is division of supply versus demand. So the demand side of the equation is not shown in the active listings, but we are sitting a little slower than the 10-year average of 9/10 of month of inventory. And this is the months of inventory trend. You can see March we were sitting at 6/10 of a month of inventory, then 7/10, and because all this new listing inventory, we're sitting at 1 month. That's a significant change from month to month, and showing up on the east side is also going to show up in the other areas that we look at. Lastly is our median price, median sales price. I will speculate at this point is going to peak out this month on the east side at $1,007,000. We'll roll the tape back in another month to see if I was right. But I bet this is the high point for median price on the east side. We are up significantly from a year ago, from $1,450,000 to $1,007,000. But when you look at months of inventory, odds are prices will start to settle as they typically do this time of year. So that's not a huge leap on my part. It is just the normalities of a marketplace. Seattle. So again, 10-year average change in listings April to May is up 10%. This year it's up 40%. And more importantly, if you look at the number of 949 where it's currently at and the 10-year average is 741, inventory in Seattle is well beyond what it would normally be at an average time this year. And that is showing up in a massive jump in months of inventory. Last year it was 1 month of inventory. The average for 10 years is 9/10. It is now 1.5. I do think you're going to see prices settle quickly in Seattle if these dynamics don't change. Our months of inventory have been running higher than the average for the last 3 months, but again, a significant jump in May here, and that's showing up in a decrease in the median price so far this month. It is still up compared to last year at $905, but it has dropped down to $965 from $998 last month, and that's going to be all about supply versus demand. That is, if you want to know where prices are going, pay attention to the months of inventory, supply versus demand. That'll dictate the direction of prices. And finally, Snohomish County, we're going to look at the 10-year trend for changes in listings from April to May. Normally, listings would jump up 19%. That's the normal change. This year, we've had a massive jump in Snohomish County, up 59%. So that's the bad news. The good news is active listings still remain below the 10-year average. For May, it would have been 1,139. This year, it's 934. That's keeping the market somewhat in check. But that change is significant, and if that continues to happen, we're going to have a different market for sure. So months of inventory is also showing higher than the 10-year average. Normally 8/10 of a month of inventory. It's now at 1 month up from last year. And if you look at the months of inventory trend, it has also taken the same path as other markets that we've talked about, Seattle and the East Side, going from 6/10, 7/10, and 1 month of inventory. That is thankfully still showing our median price being strong, but if that trend of months of inventory continues to climb, expect this likely to be the peak of the Snohomish County prices for this year. So to recap on prices, as we talk about that, that does not mean this market is going to fall apart and prices are going to decline, but it does mean that the pressure moving prices continually upward is likely to be relieved. That may see prices settle a bit, but typically not significantly. It is just the good news for a buyer is you're probably not going to have to continue to pay more than the last home that sold down the street. So if you've got questions about the market, want to understand what's happening and how it applies specifically to your desire to move, reach out to us. If you have yet to do so, hit the thumbs up icon, share this video with a friend, leave us a comment down below. That helps us understand that we're giving you information you'd like to hear about. So thanks very much, and we'll talk with you again next month. Take care.